Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again at euro currency. So market shows weakness as we discussed yesterday, and currently a lot of events are happening in the United States. First of all, this is the strike that, as you know, in the ports, which has actually paralyzed all logistics in the United States, and it's still the big question what the consequences will be. And the approximate calculation, it costs approximately 2 billion per day. So for economy and how long it will last, it's difficult to say. Another very interesting situation stands on the money market in the United States, where the interbank rate, which is called as SOFR rate, is some kind of the LIBOR rate in the previously were used, has jumped above the reverse repo rate in the United States. This indicates the problems with liquidity. So, and in general, if you take a look at the chart of the 10-year bonds, let's take a look what we have. Yes, we could withdraw this type of action due to the Middle East conflict, where some demand for a dollar have appeared, but what's going on right now? So market is returning back to the 3.8%, which means that nobody even signed the 50 basis point rate cut. So market returns back to the area where it was, and this could be treated as indirect sign of the rising inflationary expectations. So this is not good. Together with the interest rate sudden jump, you know, yes, there was some problems with the Bank of America transactions, and the clients actually was paralyzed totally. Whether it was some purely technical issue or something different has happened, difficult to say, but some consideration that somehow Warren Buffett was selling particular Bank of America stocks in the recent few months. So I don't know how to treat it because I did not have all information, but this is the fact. And that explains why actually dollar shows really significant upward action. It means that if we take a look at the short-term perspective, currently on this week, I think that 110 area still could be reached. The market right now is preparing for payrolls report. ADP numbers were not really bad, more or less positive. We will see what will happen on the payrolls, but currently the payrolls, it's not the primary object to watch for. And if it will be released somewhere around expectations, hardly it will make significant impact, because Fed policy mostly is predefined. Big questions will be either 50% rate cut, 25. In weekly report, we explain why it's really big chance that once again it might be the 50%. All these problems with the treasuries and some mess in interest rates, it just confirms this moment. So that's why in the current circumstances, I think that besides we have the technical indicators, some technical issues that suggest possible deeper downside action. So on a daily chart, this is divergence first of all, and target stands relatively close. In fact, market has broken for the 618 support on intraday charts. It has no barriers until the 110 area. So this will be next destination point. On the follow time frame chart, you could see what has happened. 1% 27 extension has been reached. Only minor retracement is done. Market dropped further. Here's great thrust is preparing. But for us, this is not really any problem, just because, as we said, we're not considering taking any long position right now. We're just watching for a bounce. And if it will happen, we will see. Maybe we'll use it for taking new short position, because we have bearish context on the daily chart. At the same time, market stands somewhere around 127, and we currently could just keep an eye on what will happen. So on hourly chart, for example, it might be chance to appear the hand shoulders if still we will get a bit deeper retracement. So actually, we absolutely don't care about this, how it will be. If it will happen, that's great. We just will use it. If not, we will be watching for 110 area, because it stands already very close to the 30 points, 30 pips below the current market, and we will see the bounce out from there. If you still would like to take the long position and you trade on intraday charts, as I said earlier, and I repeat it again, that in the current circumstances, background stands bearish, and or better to say bullish for United States dollar, and in the current circumstances it will be better to wait for patterns. So wait for something. For instance, minor butterfly, if you trade on 5-minute chart, trying to wait and take the position most times to the break even. If you trade here on the hourly chart, wait for the hand shorts once it will be formed. It will save a lot of money. If still you will be wrong, the market will drop. If you put your trade with the patterns, it's much cheaper and increases chances on success. Finally, as just some thoughts, some things to think about, let's take a look at the dollar index. I will show you a weekly chart, guys. On the weekly chart of the dollar index, and here's, guys, by the way, as you can see, treasuries once again keep going higher. So take a look on the weekly chart what we have. Great thrust down and the shape of the double repo buy pattern. Yes, we do not have first close above the 3x3 to get the theoretically perfect pattern, but in fact by its nature it looks like double repo. We have first minor retracement where some investors have taken short position, breakout of the lows where breakout traders have taken the position, and all of them are cut in the wrong direction, and fast upward reaction washing out all these people who've taken the short position, this downside action. This is purely technique and tactic, how the actually market mechanics, how the double repo works. And from that standpoint of view, it suggests further upward continuation. If we will treat it as a double repo, it's usually 50% of the thrust as a minimum target. Also, don't forget what I said previously about this area. It's very important support and hard for the dollar index, and this will be really very important. So a lot of volatility might be right there. So all the stuff together, I just could repeat that currently we have bearish context on euro. We're not hurrying to anywhere. If we will get moderate pullback, we consider it for taking new short position. And currently we would not consider any longs.